thanks for being with us again today.
Yeah.
You're giving a talk here at Minds and Money in London about lessons learned from the Bre-X fraud. What kind of advice do you have for our investors, for our viewers?
Oh, well, just because Bre-X happened 20 years ago doesn't mean that it doesn't happen every day to various degrees. Week really doesn't go by that I don't see something really sketchy going on in the mining business, and investors need to be very cognizant of that and really keep their guard up, ask a lot of questions, and make sure they don't get taken advantage of by a lot of these mining stock promoters.
Well, how did you do it with Bre-X?
I was fortunate enough to go on site, and so I flew all the way down to Indonesia, managed to get onto site. And upon my return, I met a gentleman who has since unfortunately passed away, Dale Hendrick, and he was really useful in opening my eyes to a number of the frauds in the mining business, how things happen, and he gave me tons and tons of fraud stories. So that's been, I remember those, and since the Bre-X days in the last 20 years, I've built my own database of all the fraudulent things that have been trying to pull on me. And so there's a lot of dishonesty in the mining business. I'm hoping I know most of the tricks, and I think I do know most of the tricks. But there's always new ones being dreamed up, and they're getting quite good at it.
But that's changed a little now with technical reports, NI 43-101, hasn't it? Or is that still not enough?
Well, you're not going to regulate away dishonesty, and within the regulatory regime today, there's tons of ways in which there are abuses happening, and they're happening every day. Yeah.
Warren, you're the top performing hedge fund manager from 2016. So I want to talk to you a little bit about your investment philosophies. First of all, what's your thesis? What do you look for in a company or a stock?
Yeah, well, for me specifically, I focus on the Canadian market. That's where I believe I have an advantage. So we have a tremendous home court advantage being in Canada, dealing with Canadian mining stocks. And again, also Canadian oil and gas companies we're involved in. So what I try and do is I try and find the sweet spot within the mining sector. And for me, the area that I believe is the sweetest spot, and the area that I have a passion for, are junior exploration stocks. So by the time, I look for companies that are out to make the next big discoveries. That's where the biggest juice is. And then I generally try and move out of those before it starts moving into production and things like that. That's not something I have an interest in, really.
But it's difficult with, as you say, with junior mining stocks to be able to properly evaluate. So how do you look at a stock? What's your evaluation criteria?
Yeah, it's really different because there's so many different commodities. For instance, we were heavily involved in the next-gen discovery, the big uranium discovery in northern Saskatchewan. And we looked at that probably for about 6 or 8 months before we actually took a position in it. And generally, good management, good technical team will end up with good projects. But the level of integrity of the management team is very, very important to me. Also, I also look at make sure it's in the correct jurisdiction. I've had too many instances where we've made beautiful big discoveries with great management teams in lousy jurisdictions, and actually had whether it be the company actually outright expropriating the property, or the local governor asking for kickbacks to put it into production. So I'd rather stay away from countries like that. And one that comes to mind here is Argentina. We've had real tough time putting projects into production in Argentina, so I just stay away from Argentina. And that's just one of a whole host of them that I try and stay away from.
So look at the management team, look at the jurisdiction.
Yeah.
Looking back on your career, Warren, what's been one of your biggest hits, also one of your biggest misses?
NextGen's been the most recent big hit. But prior to that, in the sell-off of 2008, we loaded up on some oil companies, which we made a ton of money on. So we like to buy stuff when it's cheap. We bought NextGen, the bottom of the mining sector. It was super cheap, and that really helped us a lot. Also, we bought a lot of the oils really cheap in 2008, which we really made a lot of money on. On the losing money front, one of the names I lost a lot of money on was Noront. Noront made a big nickel discovery in northern Ontario. And for a host of reasons, that didn't pan out as we expected. They're using a technology called VTEM, which is extraordinary technology to find nickel deposits. And just so happened that they just found their first big discovery was not replicated as I had hoped. Generally, nickel deposits can be found in pods, so if you find one, you could also often find 3, 4, 5 more. And in this instance, to date, we've only found one. I think over time, once Noront gets the road into the Ring of Fire and exploration costs drop, I'm hoping that companies like Noront and others up in that region will start making more discoveries. But that's a few years off until that road gets in.
Anything that you've learned from that you can apply to future investments or future picks?
In that instance, I think I stayed married to the name a little bit too long, and it's nice to believe in a stock, but definitely don't get married to it. It is a stock after all. Stocks go up, stocks go down. In that instance, obviously sell once they didn't make the subsequent discoveries that we'd expected them to make.
Right now, Warren, what sectors do you like? What are you looking at?
Well, I'd like two sectors right now. One that I really love right now is the oil and gas space on the explorations front, junior exploration in the oil and gas. The reason being is it's a few years after the turn in the oil cycle is happening now, and it's a couple years after the turn in the metals sector. And as we all know, when metals turn, they turn reasonably well and reasonably quickly. So I think right now junior oil on the exploration side, on international exploration, is a tremendous value. We just bought a property that had $250 million spent on it. We bought it from a receiver from a bankrupt oil company for $10 million. So those types of values are out there. And in the mining sector, mining's kind of behind the oil sector for me, just because we've had the bounce off the bottom. We're starting to see a little bit of froth in a few more names where people are overhyping certain names. So we're starting to see a little bit of frothiness that, frankly, I haven't seen in quite a number of years. And one of the reasons I didn't get out as much as I would have liked to in the last cycle is the cycle before that, in the mid-90s, it was very, very clear you were at the top of the cycle. Everything was super hyped. There was rare to find a junior mining company with with less than 100 million market cap if you had a management team, a project. But this last cycle, there wasn't that level of hype that I saw the previous cycle. And what's interesting about this cycle we're into now is I'm starting to see that hype. I'm starting to see the froth from the investors, and it might be due to a few reasons. One might be that the blow up of Bre-X in the mid-90s, it smoked a lot of retail investors, and I think they stayed away the past cycle in the early 2000s. And now we've got a whole new crop of retail investors that are about to learn hard lessons about how tough the mining business can be to invest in.
Well, let's hope they take your advice, Warren. Thank you so much for being with us today.
Thank you very much, Angela.